Hey guys, welcome to another Monday morning, and this time with Rozella. Stephanie is still taking some time off because remember from our last video, she had her baby. How's
Yeah,
Stephanie doing, Rozella?
another baby. She's doing good. She's doing really good. Her and baby are both good and poking right along. So we've been doing our very best to give them their space and time to do all of those fun little mom
Space and
things.
time. Stephanie will be back pretty soon, maybe even next week, guys. In the meantime, we get Rozella. Rozella and I were talking off screen about some interesting topics, one of them being this interesting economic outlook that we have right now. Following the Fed, we follow the Fed. I follow the Fed very closely because it's a mortgage kind of thing. And Rosella was asking me some really insightful questions. Like, for instance, the Fed met last month and did not change what's called the federal funds rate. That's the rate that the Fed lends funds to banks overnight and banks lend funds to banks overnight. So it's a very low rate. But actually, it's kind of high compared to what it's been. It's in the 5% range is what the cost of funds for overnight funds is. And that's a short-term rate as opposed to long-term rates, which is like 30-year fixed mortgage rates. And why they went down so much last week when the Fed did not change their rate? Well, it's an interesting question, isn't it? The reason is
Mhm.
because the Fed stance right now is that there's a very high likelihood they're going to lower interest rates on their next meeting in September when Chairman Powell did his little speech thing that they do after every Fed meeting. He basically indicated they were going to do that. The bond traders and stock investors really liked that outlook. And what that means is they think that it's good and that rates are going to be coming down long term. And so long term rates adjusted already and they dropped quite a bit. Roselle, I don't know if you noticed that, but the last week we dropped 50 basis points or so, which means about a 0.5% in rate, which is a very significant drop in 1 week, guys.
Yeah, word on the street over here in our housing market was rates came down last week. And so I've been waiting to ask you about that too. That way you can kind of tell us what we're looking at. If rates are coming down, are they going to kind of continue to decrease, or are we going to kind of come down and then just stay where we're at?
I suspect it's going to be a bumpy road like it's kind of been, with maybe a little
Okay.
more steep decline. But there was a pretty good drop actually, but then it jumped right back up again, but not all the way from where it started. So it came down quite a bit, jumped up some, and we're kind of there because bond traders, well, what's happening? You get new economic data all the time. The unemployment rate came in after the Fed did not make their change. The unemployment rate came in higher than what was anticipated. That causes a worry in the market that, oh my goodness, maybe they should have lowered rates to stimulate the economy, because what we're trying to do here, what the Fed is trying to do is avoid a recession, the proverbial
Right.
recession, and have that soft landing that you may have heard about in the news a lot. And they've been doing, I think, a pretty good job, but I mean, it's so difficult. Hindsight is so easy to look back and say, oh, they probably should have lowered rates because look at the unemployment rate. But there's so many indicators and some of them are conflicting. It's hard to say. So I think,
Right.
Rosella, what you're going to see is downward trend in rates between now and into next year, but it's going to be bumpy. So if you're going to refinance, guys, first thing is get together with your loan officer and have a strike price rate that you say when it hits that rate, let's lock that loan. So your lender can do that for you because that rate may not be available the next day because it might go back up again and then come
Right.
back down slowly. That's how it works.
So
So
let's say we have a couple of buyers that really need the numbers to make sense, and that rate definitely will help make it make sense. If we
right.
were savvy enough, if we, because of how bumpy it's going to be, like you said last night or last week, it came down, but it already kind of came back up. If we were savvy enough, could we have gotten our buyers locked in last week at that little bit of a lower rate? And then they could have
Um,
started their shopping process, or what would you recommend since it is kind of bumpy and we have a few buyers on the fence with that rate? What are you suggesting they do?
that's such a good question, Roselle. As you ask, another good question. The answer is really kind of complicated. We used to have a forward lock available that you could lock a rate before getting into under contract with a home. I don't think that's available right now with our lenders. I haven't seen that in some
Okay.
time. So that means that you really need to be under contract with the home before you can lock the rate. So
Okay.
what we're typically doing, what I was doing a year ago, guys, when you went under contract, lock the rate like that because it's a bumpy road and it's kind of going up. So lock it quick. Right now, we have an indicator. Every day we look at an economic broadcast from a really smart guy that we know, Barry Habib. Shout out to Barry and his crew who have been very accurate in predicting the trend of rates. And they also tell us whether to lock for the next day or not. They're pretty
Okay.
accurate 24 hours in advance, but 48 hours, you never know because there's so much economic
Right.
news that come out there. So get under contract and then watch that rate really closely, you knowing that
Okay.
rates are probably on a downward trend. And then when it hits the right number, I say lock it rather than try to hit that lowest of the market, which some people kind of do, because they come down kind of slow. But when they jump because of something, they jump right back up so fast.
Well, what you're saying is that buyers should have already been looking that way. They know if they find that right property, they can make the offer because you need that property to be able to lock in the rate.
Yes. You have to be under
Okay,
contract to a home for us to lock the rate. Exactly.
perfect. People are sitting here waiting for rates to come down before they even start shopping. That's not necessarily the best idea because you can kind of shoot yourself in the foot and not have the appropriate property ready to go for when you want to lock in that rate.
Yep. And so
Okay.
one question for you I have, Rosella, is nationally speaking, there was an uptick in purchase activity when rates came down. Did you feel that in the Spokane Deer Park area at all? Were there more offers being made, or do you have any idea?
Within just the last week, to be honest, we ourselves had an uptick in buyers. Getting these buyers under contract, however, maybe not so much. I think there is a little bit more of like competition out there just, recently, but it's not necessarily in all of the homes. Those are going to be your lower price point homes. Again, those are the people I think that were waiting, and they're like, oh, now's the time. So I don't think it was all over our area that we really saw an uptick. I think it was just within certain price points or certain properties that people were like desired on. But then
Yeah.
again, our area is very, very seasonal. And so a lot of our seasonal stuff drives our market. And right now it's just a standard, typical like lull in our market with the way summer's going. Kids are getting ready to go back to school, that sort of thing. People are finishing up vacations. So weather's hot. Nobody wants to go shopping when the weather's this hot out either. So I think that little bit of uptick just for our buyers coming in were just that lower price point ones, but it wasn't all over the board like we should have seen. But then again, seasonal.
I think that makes sense, though. I think the price point thing probably held true nationally speaking, too. I'd have to look in the data, but that does make sense, especially mid-priced homes, starter homes and mid-priced homes. That's the ones where people are waiting for rates to drop a little bit, and they did drop a little bit, and I think there consequently were more offers on homes, which is
Yeah.
exciting.
Yeah.
So
So
once
we
again,
definitely expect right around after school starts.
yeah.
Usually once the kids are back to school, that's kind of when we pick back up before all the holidays and stuff. So hopefully with those rates coming down and the way our seasons collide, we're going to have a really good fall season, hopefully.
Yeah, I can see that happening.
Mhm.
Absolutely. So I think the closure in this one, guys, is rates are coming down, kind of bumpy. But what I suspect to be true, we've talked about this in previous videos, is that when rates come down even further, like Roselle is indicating, you're going to have an influx of buyers into the market that tends to have what's called more demand. And that means that prices typically go up. So it's hard to pick the perfect time, but the perfect time is when you find that house for you that you can afford and the payment works. If rates come
Yep.
down even further, guys, we can refinance you into that lower rate next year, if that's the case, and you'll get the benefit of that house equity in your corner on your balance sheet. Thoughts, Rosella?
Absolutely. My final thoughts on that one are I think people need to really keep their eyes open on what they're actually wanting house-wise and maybe not stress about the numbers so much. Only because, like you were saying, so many things can change day to day in our market. And those people that keep on kind of waiting, here they keep waiting for rates again, but then our buyers' demand's going to come back up and they kind of seem to have a fight no matter whether they wait or not. And so I think it's just important to keep your eye on like the properties that you're really wanting. That way, if the one that's perfect for you comes along, you're ready to do it and you have everything in order.
Yeah, get everything in order so you're ready to jump. That's exactly right.
Yeah.
Rozella, thanks for your time again today. So appreciate you guys doing these videos with us.
Absolutely. Thank you, John.
All right, thank you. Bye-bye.